I think silver prices will at least be above 32 this year. Pretty sure of that, pretty comfortable saying that. I think they probably will be closer to 35. And I think for next year, 40 is a very likely, and potentially as much as at least touching a $45 level sometime next year. Silver is the next uranium. Except, well, I shouldn't say except. Uranium has gone to $80, has maintained those levels, has been very steady. I think we're going to see a tremendous, sustainable run-up in the silver price, and the new floor is going to be a lot higher. I think it's going to be probably somewhere above $50, which has been its all-time high for, 50 years or so.
Silver is emerging as a standout asset with remarkable potential in the ever-evolving landscape of precious metals investing. Market analyst Peter Krauth presents a compelling forecast, predicting silver prices could climb to $32 this year, potentially reaching $35 by year-end and possibly soaring to $40 or even $45 shortly. This bullish outlook is substantiated by the annual London Bullion Market Association survey, which supports Krauth's prediction. Experts are forecasting silver could hit $45 per ounce by 2025, representing a potential growth of over 60% from current market levels. Peter Krauth notes that silver's volatility is due to its dual role as an industrial and monetary metal. Silver has been used as money for over 5,000 years, longer than gold, and its lower value per weight made it more practical for everyday transactions. The complexity of silver's pricing stems from its unique dual role as both an industrial and monetary metal. The Silver Institute's Market Trend Report, Factors That Determine the Silver Price, explores how silver's extensive history as money intertwines with its contemporary industrial applications to shape its economic value. Historically, silver's lower value per weight made it more practical for everyday transactions compared to gold. Today, its economic importance extends far beyond monetary roots. The metal plays a critical role in cutting-edge industries, including electronics, solar panels, medical devices, and electric vehicles. This diverse industrial demand continues to drive its economic significance. Silver has recently broken out of a long-term consolidation zone, suggesting the potential for significant price movement. Krauth emphasizes that this breakout, combined with the metal's dual-purpose nature, positions silver as a beautiful investment opportunity for discerning investors. Before diving into the video, subscribe to our channel and hit the bell icon so you never miss an update. Also, feel free to share this video with friends and anyone who might find it helpful.
It's true that silver is more volatile, but it's also true that silver is really both an industrial and a monetary metal, and that's what makes it unique, I'm going to say, amongst metals in any case. But it's also been money actually longer than gold has. So something like 5,000 years, that's something that I write about in the book. And some believe that silver has been used more as money in terms of, if you value transactions globally, historically, it's been used more than gold has, which also makes sense because of its lower value per weight, that you would have used it more in sort of daily transactions. And so silver is definitely money. There are more than 14 places in the world that use the word silver as money. So there's a lot of history and cultural affinity to silver. And I think that if you look at how investment demand flows, so we're talking about coins and bars, when the demand for silver comes back on the investment side, and it does ebb and flow a lot. It was crazy in 2020 and 2021, and then it had pulled back a little bit. These are somewhat unpredictable, I would say, but when it comes roaring back. And I would simply just not underestimate the investment side of demand for silver. And if you look at when the Fed starts to cut rates, the last two rate cutting cycles, on average, were about 3 to 4 months before a recession would hit. So the first big cut came in September. If history repeats, that would mean sometime maybe in early Q1 next year, we could be officially in a recession. And there's always been talk about how that affects silver. And it's true that if you look at how silver reacts, it doesn't react as well as gold does in a recession. There are things that may counterbalance that a little bit this time around, which we can get into. But history has also shown in the last 3 rate cutting cycles that silver performs exceedingly well. There was some research by the Ingold We Trust report group, Incrementum. They showed that if you look at how silver reacts in the last 3 rate cutting cycles, silver was up 32% from within the first 24 months after the last 3 rate cutting cycles started. So that's pretty good within 2 years after starting to cut rates, despite the potential weighing against silver because of its uses as an industrial metal. So I'm going to one-up that even more. And I had looked at research they'd done on gold when the Fed would start cutting rates, and I thought, that's interesting. Let's see what silver does when the Fed starts cutting rates. So I did cherry pick. I'll be fair about that. I'll be honest about that. What I did was I looked at once they start cutting rates and how does silver react after that? And I picked the bottom. So in other words, they would start to cut rates. Silver may come off for a bit, but then it bottoms and then it starts to take off. Well, in the last 3 rate cutting cycles, if you go from bottom to peak in the silver price, silver was actually up 332% on average in the last 3 rate cutting cycles by the Fed.
And that's in a 2-year period? How long is that?
That varied, actually. That could have taken anywhere from about a year to 2 years. But that's still a tremendous return, right? It did correct as well after peaking because it's volatile and it over rallied, I suppose you could call it. And then there was some rationalization of that run up, but that spells real opportunity for what the silver price can do. So, it's out there. I'm not making it up. You can go and look at the numbers. That's how silver performed. And I don't see why, anywhere from maybe 100 to 150%, if it averaged 300% the last 3 times, would be unrealistic this time around.
Peter Krauth's analysis reveals a compelling narrative of silver's market potential, highlighting its historical performance and prospects. Notably, silver has demonstrated a pattern of outperforming gold before and after previous recessions, a trend Krauth expects to continue, particularly with the ongoing energy transition and increasing government mandates driving green technology demand. In 2023, while gold reached unprecedented all-time highs, silver initially lagged. However, a significant turning point emerged following the Federal Reserve's strategic decision to cut the federal funds rate by 50 basis points. This move sparked a remarkable surge in silver prices, with the metal outperforming gold and reversing previous market uncertainties. The Federal Reserve's reassurances about the U.S. economy's stability and the reduced likelihood of an imminent recession played a crucial role in boosting investor confidence. These factors effectively countered the market speculation that had previously pressured silver prices during the summer and fall. Krauth's perspective underscores silver's evolving role in the precious metals market. While gold has traditionally dominated, silver is emerging as a more dynamic and strategically important asset. The metal's unique position, bridging industrial innovation and investment potential, suggests a promising trajectory for investors and market observers alike. As green technologies expand and industrial demand grows, silver stands poised to become an increasingly critical component of technological advancement and investment portfolios. Let's get back to the video.
Silver outperformed gold pre-recession and post-recession. So I think we will see something similar potentially happen again this time around. Where I do see potential for, the market may be getting it wrong, is that I think that so much of the energy transition is mandated now. And we saw it in the great financial crisis. We saw it during COVID. Governments like to come back, and I honestly believe that one of the big reasons they're cutting now is so that they're stimulating now. One of the big reasons that they're cutting back on their balance sheets at central banks is that they have room to expand their balance sheets once again, which I think they will absolutely do once we hit recession. So allowing for this room, allowing to stimulate, means the Treasury is going to spend, and for the Treasury to spend, they have to do things that are palatable for voters. And one of the most palatable things is infrastructure. So, because people will argue that everyone benefits from spending on infrastructure. We saw that in the great financial crisis coming out of it. We saw that coming out of COVID, and I think we'll see it in the next recession as well. So that's very, very positive for the green transition. Things like EVs, things like solar, things like wind, even charging stations for EVs, for example. Now we've got improving solid-state batteries. We've got all sorts of things going on. Silver is key to all of these things, And that's why I think that we may be underestimating how silver will perform in a future recession. So if you look back, I believe what's happened is that over the last 4 years, and when I looked at what I call secondary supplies, and this is what's held by the COMEX, it's held by the LBMA, the Shanghai futures, and then you've also got the silver ETFs that have considerable amounts, hundreds of millions of ounces, if not up to billions of ounces of silver as well. And if you look at the charts, which you can find, they're available online, all of them have seen their inventories peak around early of 2021. And ever since then, their inventories have been dropping. It varies, but anywhere from about 40 to 70% down in the last 3 years, 4 years.
And this is the supply that could theoretically step in when you have
exactly, and I believe that's what's been happening. So you've got this demand that has been well above supply, but you've also got this secondary inventory or secondary supplies that are just sitting there. I think that especially industrial users have said, oh, well, there's this supply. Why don't we just go and buy into that, drain those supplies? We don't need to push miners to give us the silver. We can just go and drain these secondary supplies. And that's not going to affect the silver price because silver's trading at X dollars. We're going to buy it at spot, whatever that is, and it varies. And we can draw down. I believe that game is almost over. And so I was saying this back in March. Interestingly enough, about a month later, someone in the industry emails me a report by TD saying essentially the same thing. that
we're maxing out what we can be pulling out of these supplies.
Exactly. Inventories are being drawn down. We've got, I was saying at the time, 12 to 18 months. They thought 12 to 24 months. That was more than 6 months ago. At this point, we've maybe got 12 months, maybe still 18 months left, and then the game's over. I think that the market started to realize that probably in the second quarter of this year, and I think that's why silver prices started to move up, and now we're at the top end and above the range we've been at for 4 years, and miners are starting to make some money, right? And it's starting to be reflected in their share prices. They've all moved up. Many of them are up 50%. Some are up 50% in the last few weeks. Many are up 50% in the last few months. It's been a good time this year. Silver has outpaced gold this year. Silver is up about, I think it's 44, 45%. Gold is up a little over 30%. It's been a tremendous year for silver.
Silver's history of outperforming gold during recessions and increasing demand from green energy and technology sectors suggests it could see significant gains. Silver is well positioned to benefit from economic stimuli and infrastructure investments, potentially surpassing gold as both a precious and industrial metal. Do you believe silver will outperform gold in the upcoming recession, or will gold maintain its lead in the precious metals market? Share your thoughts in the comments below and remember to like, share, and subscribe for more updates. Thanks for watching.